Okay, here's one for you. Are you better off trading prop firm money, that's basically using a funded account, or sticking to using your own money and build it up over time? Interesting topics. I think it's about time we addressed it. Now, if you're certainly in the markets, you're looking at the industry, you'll certainly be aware of the prop firm industry. It's taken off massively over the last few years, and indeed over the last year it's had an exponential growth. Everywhere you look, there seems to be a new prop firm setting up. A lot of them are no better than just a Ponzi scheme, but I'll talk about that in a moment. So basically, let's start off by defining what a prop firm is. Now basically, when I left the city all those years ago from the open outcry, these prop firm businesses were indeed basically beginning to evolve. They literally were office spaces that you rented. You rented your PC, you rented the computer, you maybe had a Bloomberg terminal there as well, and you had the mechanisms to basically trade the markets, all markets, no matter what you were interested in trading. They often would provide you education for a fee as well, and once you're able to satisfy the risk manager that you had some form of discipline and control, they'd let you loose with the company money. They would literally fund the account, and if you had a profit, they would give you a percentage of that profit. And that was basically the sort of way the prop firm started all those years ago. There are firms out there still clearly doing that same thing, renting office space in buildings and so forth. But over the last few years, this has been taken online. As I say, they're popping up all over the place. Now you'll see people offering these challenges where you basically pay a fee of whatever it is, $400 or $500. You pass them certain challenges, some of them very, very tough. And if you pass those challenges, then they will give you an account. And at the end of it, they will give you, if you make a profit, a certain percentage split. Now that varies. Also, a lot of the prop firms you see online these days, they have different models. Some of them give you money directly, straight from the go. Some of them will have these challenges and different evaluation phases that you have to go through. Now, certainly if you're interested in doing some review of the available prop firms, there's plenty of folks out there doing just that. I actually look at them myself as well, always evaluating what the market is up to. But just be aware that some of them are, as I alluded to, just Ponzi schemes. The prop firm basically wants you to lose. In fact, this week, there's been quite a famous prop firm, quite a well-known prop firm, that's basically announced that they're now paying 100% on all profits. So you get to keep 100% of all the money you make. Think about that for a moment. Why is that prop firm doing that? Of course, they're charging you a fee to enter, to do the challenge. Why are they doing that? Because they know that most people fail. And this is what I said about the Ponzi thing. So they know most people fail, and they're using all these failed subscriptions, all these failed membership fees to pay for those that make money. And if the trader is really good and makes money, where are they getting the money to pay for that? They know that most don't make it. So be careful about that. Spend some time going through the different reviews. Some, as I say, have straight sort of live accounts without having to do evaluation phases and so forth. Different degrees of risk that you allow and how much you're allowed to lose in order to pass these challenges. As I say, there's plenty of review sites out there. You can check them in your own time. But what I want to talk about today is if you are considering doing a prop firm, what I think should be at the forefront of your mind. Firstly, I want to ask why you would consider doing a prop firm in the first place. Well, generally, the reason why people want to go into a prop firm is because they don't have enough money to make it viable to trade their own accounts. They might only have $500 or $1,000 to invest in the project, and clearly with the returns that you can get from trading, that's not viable. It'll end up just blowing up the account after account, losing $1,000 here and there, $500 here and there. So people go into the prop firm industry because they don't have the funding to back up their trading. But the other question is, why are you going into this in the first place? You're going into the business of trading to make money. Whether you trade your own money or you trade the prop firm money, it's the same goal at the end of the day. So if you agree with that, let's boil it back down. Let's talk about why most traders fail in the markets. I don't know what the statistic is. They say 95% of traders fail when they come into the markets. Here in the UK, the brokers have to divulge the number of winning traders against the number of losing traders on their accounts. Last time I looked on some of the main players, it was around 76 to 78. I think it's actually, as I say, more like 95%. So most people are failing. So let's boil it down. Why are people failing? Is it because this strategy is no good? Is it because they spent thousands of dollars on the perfect strategy and it fails? Or is it because maybe the markets aren't right and the markets are out to get you and everyone's doomed to fail in the first place? Well, I'll tell you why I think most people are failing, and then we can talk about the prop firm route or the self-funded route. The reason why people are failing is because of the emotional pressure and turmoil that most are under when they trade. Trading is a very emotional business. Money is an emotional commodity. No one likes to lose. No one likes to lose money. Everyone gets excited when money comes their way, whether they win it on a raffle or whether they make it in the markets. People get excited when they make money. So it's the emotions that are controlling most traders. And the successful traders know how to manage the emotions. The mechanics of trading can be taught anywhere. Anyone can teach you the mechanics of trading, when to buy, when to sell. It's the emotions that basically determine whether you're going to make it or fail in the markets. So if that is the case, why would you be taking prop firm challenges, spending $400 or $500 a go, unless you know that you can control the emotions? Do you think by trading other people's money on a prop firm challenge, you're not going to be as emotional? You still have that big desire to make it. You have the desire to hit that profit target, whether it's 5%, 8%, 10%. You still have that desire. And when you get closer to that target, your emotions get more heightened. You get more excited. When you have your losing trades, you start to feel depressed, downtrodden. It's exactly the same as trading your own money. If it's a $500 account, $1,000 account, $50, whatever it is, your self-funded account, the emotions are there in both avenues, both routes that you decide to take. Do not believe just because you're trading other people's money that you won't fall victim of these emotions. Save your money. Stop doing these challenges and gambling away. You may hit the profit target of 5%. But if you're going to be in this game for the long haul, i.e. becoming a trader, then you need to get the foundations right first. So this is why I think most people out there that are seeing this new carrot, this newfound carrot of prop firm trading as their way out of their predicament where they are at the moment. They think it's free money. But they're paying for this and they're failing. They're paying and they fail. They pay and they fail. And all they're doing is basically the same as any guy that's putting in $500 into his own trading account. If you're serious about learning how to trade, if you're serious about going down the prop firm route, and I think it is a fantastic route to go down, if you're serious about that, you've got to focus on the process of trading. You've got to understand how to trade properly. We all have winning trades. We all have losing trades. Trading is much more than that. It's about the process, about the psychology. So you need to get yourself educated, I think, before you waste any more money doing these challenges, some of which you pass, some of which you will fail. Get the education. Treat this like a business. Whether it's your own funded account or whether it's a prop, it's still a business. If it's not, then why waste your time? We're coming into spring now here in the UK. The weather is beautiful outside. Don't waste your time sitting in front of your trading screens on a prop firm account or a $300 or $400 account trying to make a living until you know how to trade properly. Get yourself educated. Get yourself into a trading community, if you like, that can basically hold your hand along the journey. Get yourself maybe some mentorship as you progress through your trading career. Believe me, the emotional stresses, prop or self-funded, are going to be exactly the same. I just want to leave you on the note about the prop firm businesses out there. There are a number of prop firm businesses out there that do indeed offer the education alongside the ability to trade the funded account. So maybe it's worth looking down that route. Some of them might not be giving you the best split in terms of profit. Chances are that prop firm is actually investing in you and is actually putting money up into the broker to take a benefit of you being a successful trader. Some prop firms out there are really generally looking for the successful traders. 95% fail. That means 5% of people are making money. There are some prop firms out there that are looking to scoop up that 5% of traders so that everyone becomes a winner at the end of the day. So maybe you want to think about doing that route. If a prop firm is offering you 100% or 90% and they've got such tight rules that you have to pass in order to get the funding, think about it, why they're doing that. So as I said, there's plenty of people out there doing reviews here on the YouTube site, reviewing all these prop firms. The rules are changing day by day as well as the markets compete for your business. So go and do some due diligence and think about if the targets and the challenges are realistic, and then perhaps consider spending your money on doing such a thing. Okay, well, I hope you found that useful. If you want to know about the prop firms that I do recommend, maybe you can hit me up in private. I'm not going to come onto the site here and just do a review of the prop firms. I'm not in bed with anyone, but I do know the good ones from the bad ones. Hit me up, come over to the forexsignals.com website, and I might be able to give you a bit of a clue on which way I think you should be going. We can certainly discuss it anyway. Give me a thumbs up if you like the video, give me a thumbs down if you didn't. Don't forget to leave a comment. Don't forget to subscribe to the channel if you don't already do so, and hit that bell notification so you'll be notified the moment the next video has been released. And of course, you can follow us on all the socials. We are streaming live around the clock up to 7 times a day here at forexignals.com. We are discussing prop firms regularly in our streams as well. Great little community to help you. And indeed, if you're doing one of these challenges, maybe that's a place where you want to hang out. If that's not your thing, that is not a problem. I'll see you next week.